Heya Cryptozens, tonight's show. Did Three Arrows Capital go on the lam? Shu Speaks. Vermont joins Multistate Celsius investigation. And BlockFi's off again, on again with GBTC. It's 10 p.m. Pacific time. The date is July 12th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. Keep in mind, nothing in this show should ever be considered financial advice. Russell Crumpler and Christopher Farmer of the advisory firm Teneo were appointed by a British Virgin Island judge. They were appointed to serve as the liquidators in the Three Arrows Capital Chapter 15 bankruptcy filing. Well, they recently filed in U.S. bankruptcy court in New York's Southern District. Now, the reason for this filing is pretty simple. The court-appointed liquidators, or more likely their representatives, knocked on the door at Three Arrows Capital headquarters in Singapore, but nobody was home. Yeah, apparently they showed up at the Singapore offices and all they found was a locked door. So let's rewind a bit. Terra Luna had its Black Swan event. That kicked off a number of catastrophes in the crypto market. A lot of businesses that were close or were overextended ended up folding, and it looks like that's the case with Three Arrows Capital. And they are hurting a lot of people on their way out. They had their assets put up for collateral. Well, those got liquidated. BlockFi and a bunch of others got in on that. And they were so coy about it later. Like they were embarrassed to admit that they'd liquidated, which is weird because now everyone's trying to prove they're not vulnerable to 3AC contagion. If you liquidate the assets, that pretty much makes you immune to the contagion, I would think. It'd be like, yeah, they owed us some money, but we got it out of their collateral, so we're all good. Nothing to worry about. Well, it would appear that Suzu and Kyle Davies do have something to worry about, because not only have they allegedly been uncooperative, their whereabouts are currently unknown. Speaking of the pair as the founders, the filing said, quote, "And while a lawyer in Singapore purporting to represent the founders recently approached the foreign representatives, the founders have not yet begun to cooperate with the foreign representatives in any meaningful manner." Now, foreign representatives in this case means Teneo's representatives, Crumpler and Farmer. And in that filing, not only were they worried about Sue and Davies' whereabouts, they thought that their money might disappear too. They were worried that someone would attempt to take the remaining 3AC assets because, quote, "a substantial portion are cash and digital assets that are readily transferable." Now, this really set their concerns into high gear because they got a concerning email from a law firm that is apparently representing Davies and Sue. Crumpler and Farmer asked for a sit-down with the pair and their lawyers. That was denied. Instead, they agreed to a Zoom call for July 8th. And my understanding is that Zoom call kind of went off. There were the names for Davies and Sue listed on the phone call, but they were silent. There was no proof that they were actually there. Well, now Shu Speaks. After 27 days of silence, he posted on Twitter. And they're using the term baiting. They're calling it baiting because Suzu's firm, Advocates Law, they claim to have been baited. They say 3AC was tricked into talks without prejudice. In this case, what they're saying is that 3AC was told that these conversations with the creditors would be with an eye towards settling a dispute rather than gathering evidence for a court battle. And are they being fair to 3AC? I couldn't say for sure. I do know that Voyager Digital has them on the hook for over $500 million. And that's after BlockFi and others liquidated the collateral. I know that according to the court filing, Sue and Davies apparently didn't respond to requests. They allegedly didn't show any interest in being cooperative. I also know that 3AC is accused of moving assets. That's right. while they were getting ready to fail to meet a margin call, the Starry Night Capital account started moving NFTs to a single wallet. Now, Starry Night Capital, if you recall, was set up by 3AC to raise $100 million for things like an educational platform for NFTs and a physical museum, as well as curating digital art. Works by Eric Calderon, Mad Dog Jones, Dmitry Cherniak. They're expected to be worth millions. According to on-chain data, they spent $21 million to acquire 70-plus digital assets. And while the network has dropped to just under $4 million, they accounted for 10% of the total volume on Super Rare. So the concern that 3AC is hiding assets isn't entirely without merit. At any rate, a judge gave the order to allow liquidation for their assets and an order. That order gives the attorneys working for the liquidators the right to block, quote, transferring, encumbering, or otherwise disposing of Three Arrows Capital's U.S.-based assets. Now, that judge has also authorized subpoenas for the founders of 3AC and other parties. They have 2 weeks to comply. At the time of writing, the global crypto market cap is $864 billion. It's down 2.54% in 24. The top 5 cryptos by market cap are Bitcoin down 2.3%, Ethereum down 4.27%, Tether, USDC, and Binance Coin down 1.36%. The Department of Financial Regulation for the state of Vermont has joined a multi-state investigation. Now, the target of this investigation is the crypto lender Celsius. That's according to a statement released today. It's a consumer alert warning potential Celsius investors to, quote, proceed with caution, and for not disclosing a laundry list of factors: poor financial condition, how they were investing the fund's assets, what their risk factors were, and whether they could pay off their debts. The notice said, quote, previous representations made by the company, its CEO, and other Celsius representatives about the safety of customer funds and the company's ability to meet withdrawal obligations are untrue. They said Celsius is guilty of offering unregistered securities, and that specifically has to do with those high-interest accounts made available to retail investors. And they pulled no punches in their allegations. They said, quote, Celsius deployed customer assets in a variety of risky and illiquid investments, trading, and lending activities. Also, they said, Celsius compounded these risks by using customer assets as collateral for additional borrowing to pursue leveraged investment strategies. That is obfuscated rehypothecation, and in my opinion, that's really scary. Now, this comes after Celsius has made surprising headway in paying off their debts. Just today, they said they fully paid off their debt to Aave. Doing so freed up another $26 million. This part of their debt restructuring plan seems to be working. Now, last week, Celsius closed out their loan with Maker. That freed up $440 million in collateral. That said, in addition to offering unregistered securities, the Vermont DFR said Celsius also doesn't have a money transmitter license. Now, Vermont joins Texas and Alabama in investigating Celsius and Voyager. Voyager has its own legal pressures right now, including a question of whether they misrepresented FDIC protection to its customers or not. California was a little more circumspect. Their consumer alert doesn't mention Celsius by name. However, their Department of Financial Protection and Innovation issued a consumer alert that encourages customers of, quote, crypto interest account providers that have slowed or paused withdrawals or transfers of crypto assets to contact the regulator. Given that Celsius hasn't restarted customer withdrawals, it's pretty clear that Celsius does indeed fall in that category. The global NFT market cap is up 13.38%. Sales volume is down 3.38% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Bored Apes, Goblin Town, Other Deed, and Mutant Apes. Now keep in mind, some of these collections have very volatile prices, so do your own research. So the BlockFi story all started with an article by The Block. In that article, they say that BlockFi has, quote, unwound its positions in Grayscale's Bitcoin Trust. That's according to a spokesperson who spoke with The Block. Now, at first, BlockFi was saying that they would no longer take Grayscale's Bitcoin fund as collateral. And it's not hard to see why, right? Grayscale Bitcoin is trading at a loss compared to regular Bitcoin. And part of that is due to Three Arrows Capital. Their implosion caused ripples in the Grayscale Bitcoin Trust world because they were heavily staked in GBTC. In fact, they were looking at arbitrage opportunities centered around the fund. Now, it's believed that those opportunities were the timing suggests that they were to save their company's skin, but who's to say for sure? Now, what they did say was that they don't currently hold any positions in GBTC. They said that they are, quote, winding down a couple of loans where GBTC is part of the collateral package. Now, for Grayscale's side of things, they said that they, quote, offer transparent investment vehicles that voluntarily exceed standard reporting requirements, meet a heightened level of disclosure, and are subject to additional regulatory oversight. Now, Grayscale has been having their own issues with SEC and their regulatory oversight. They were shot down as far as converting their Bitcoin Trust to a spot Bitcoin ETF, which I understand. A spot ETF is a safer, better vehicle for retail Bitcoin investments. Now, best obviously is to learn how to buy Bitcoin yourself on an exchange, learn how to custody that Bitcoin by yourself, and take control over your own Bitcoin. That would be the best bet. However, borrowing that, I can see the attraction of an ETF. You get to work with familiar tools. You get to work with the people that you're used to in order to buy into it. And it's far riskier than the trust is. With a spot ETF, you can just bail out anytime you like because you're not feeling comfortable with the market or whatever. With futures ETFs and the Bitcoin Trust, you don't have that freedom. You can't just sell that Bitcoin because you're afraid of what the market's going to do. Because you don't have the same flexibility with the trust as you would have with trading Bitcoin on spot, that scares some people off. Now, sure, during a bull run, if I ask you to put $50,000 into my fund that's already going up, sure, you're more likely to buy in. More so than you would be in market conditions like they are now. That's why Grayscale Bitcoin trades at a loss compared to regular Bitcoin, down 34% from the native value. Well, word that BlockFi was choosing not to accept Trust Bitcoin as collateral didn't sit well with some people, especially since BlockFi was holding more than 5% of the total supply at one point in time. At the time, Zach Prince, CEO of BlockFi, said that buying Grayscale Bitcoin represented, quote, investment opportunities related to the product, and our significant participation enables us to add value for our clients and the marketplace for liquid and illiquid GBTC shares. And now they don't want it. Or do they? Because a few hours after the story broke on the block, BlockFi restated their position. They shared the following statement. While we don't currently hold any positions in GBTC and are winding down a couple of loans where GBTC is part of the collateral package, we are not saying that we won't support GBTC as collateral moving forward. Like any collateral, we constantly evaluate appropriate collateral haircut ratios and aim to accept as many types of collateral that our clients hold as possible. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.